Hello everyone, and thank you for watching this presentation. My name is Dole. I'm a junior in the AIM program, and I cover domestic financial services. Today, I'll be presenting Euronet Worldwide, ticker EEFT. Euronet Worldwide offers payment and transaction processing and distribution services for financial institutions, retailers, service providers, and individual customers. They operate through three segments: electronic funds transfer, e-pay, and money transfer. Their competition varies from large financial institutions to other large and small payment processors. Euronet was founded in 1994 and is headquartered in Leawood, Kansas. Euronet's revenue is pretty evenly spread over the three segments, with the money transfer segment having the largest share at 40%. Euronet derives 26% of their revenue from the US, 18% from Germany, and the rest from various European and Asian countries. Now, on to the recommendation. Euronet Worldwide built out an extensive network through their software, point-of-sale terminals, and ATMs. This expansion led to a 28% EPS CAGR over the past 5 years. But then, the coronavirus crisis hit. Because of their international exposure, Euronet's stock dropped and hasn't recovered. However, Euronet still has a strong balance sheet with $786 million of unrestricted cash and a 13 times interest coverage ratio. Also, the firm has positioned itself at the pivotal point of the shift from physical to digital payments, which gives them strong growth prospects coming out of the crisis. Because of a trend of outsourcing payment services, strong target markets, and growing digital demand, it is recommended that Euronet Worldwide be added to the AIM Small Cap Fund with a price target of $114.30, representing a 36.28% upside. My first driver is the outsourcing of payment services. Banks are increasingly looking for ways to cut costs. One of these ways is outsourcing their ATM, point-of-sale, and card processing management. This is right up Euronet's alley, as they have the capability to take over the software and management of these machines. Also, without the initial capital investments, this will lead to expanding margins. Another big growth area for Euronet is their software as a service platform called REN Ecosystem. This software can take all the company's payment providers and integrate them into one system. Euronet is expected to scale this software to third parties, which could lead to a strong growth for the EEFT segment. I believe this type of service is what Euronet will need to rely on in the long term. My second driver is their strong target markets. Although the use of cash is decreasing around the world, some European countries such as Germany, where Euronet has a high concentration, still rely heavily on the currency. Euronet also partnered with Walmart to bring money transfer services to over 4,000 stores in the US. In countries that aren't as cash dependent, Euronet can leverage their software like their payments cloud. For example, this software is being used with Amazon India to enhance their mobile recharges, bill payments, and consumer software. More partnerships like this, driven by the company's strong market share, should lead to growth in their new technology. My third driver is structurally growing digital demand. Euronet's e-pay segment provides prepaid products such as gift cards and prepaid debit cards. This segment has a large exposure to the e-commerce industry, which is expected to grow at a CAGR of 5% over the next 5 years. Euronet's exposure to this industry and product mix should lead to increased growth coming out of the crisis. For my valuation, I constructed a 5-year DCF using a WACC of 8.42% and a terminal growth rate of 2%. This yielded an intrinsic value of $102.10. An EV to EBITDA relative valuation returned a relative value of $107.25, while a PE multiple valuation gave a value of $208.66. For my comps, I weighted Jack Henry at 10%, with the other four companies at 22.5%. Weighing these models, 60-30-10 yielded a price target of $114.30. The biggest risk to Euronet right now is the coronavirus. Euronet relies heavily on travel around the world. With this travel at a standstill, Euronet is set for a big hit in 2020. Lingering effects of fear to travel will likely also hurt the company going forward. Second, the shift from physical cash to digital currency is a major risk to Euronet's ATM fleet. Fortunately, the company is positioning themselves to profit off this transition. Finally, because Euronet gets so much revenue internationally, a strong dollar will harm their bottom line. The coronavirus crisis could have this effect over the next year. Michael Brown is the chairman and CEO of Euronet. He was also a founder of the company. Rick Weller is the CFO and has been with the company since 2002. Both Mr. Brown and Mr. Weller have extensive experience in the software industry, which gives me confidence that they will effectively lead Euronet through this point of transition as they have done in the past. To summarize, 2020 is going to be a rough year for Euronet. Fortunately, they have the diversification and balance sheet needed to come out of the crisis on a strong footing. Their established position in the market creates a competitive advantage because they already have relationships to build on when expanding their software services. Many of their competitors are not as established across Europe and Asia. Through their shift to software as a service and targeting developing markets, Euronet is set up for strong top-line growth, margin expansion, and a significant rebound out of the coronavirus crisis. Thank you, and I look forward to answering your questions.